Welcome back to the CryptoFather channel. You made it through the weekend. Fantastic stuff. Today is the 21st of July. It's another Monday. Man, the crypto market has been pumping. Everything's been pumping. Ethereum is breaking out. Altcoins are breaking out. And it might be a time to start asking yourself whether this may be the upcoming end of the bull market. Things are different, they say, this time around because institutions are going in on this whole deal of cryptocurrencies and Bitcoin and Ethereum and all whatnot. But in the past, once the altcoin started to pump, that was a sure sign of ends of the things to come to an end. So where are we in this cycle? Are we coming close to the end? Let's have a look at articles. Let's have a look at what's in the future for Ethereum. One article claims that you could retire on less than 1 Bitcoin. If you have less than 1 Bitcoin in your portfolio, in your crypto portfolio, that may be enough to retire on. So let's get into all of that today. First things first, we're going to look at the market because that's what we do every single morning here on the channel. And then I'm going to look at some charts and then jump into the article. So the crypto market cap is presently standing at $3.98 trillion. We're almost at 4 trillion. Bitcoin dominance is at 58%, 58.9%, Ethereum at 11.3%. We got a trading volume of $192 billion. Yesterday, I think I looked, it was at $300 billion on the trading volume, which was massive. That was probably the biggest trading volume that I've seen ever. Bitcoin's presently sitting at 17,000, Ethereum at 3,700, and it's been pushing hard. We're going to look at the charts for Ethereum. I just made a post on TradingView because it feels like Ethereum is ready for a correction, despite the fact that it's pushing, but it's been pushing for so long that I think we may be seeing a correction on Ethereum. Maybe not a big one. It's not going to be a massive pullback, I don't think, because for that to happen, we'd need to see Bitcoin dropping significantly, I think. But I think we're going to see a retracement. We may see a retracement on Ethereum. But $3.9 trillion for market cap, that's the highest we've ever been, I believe. We haven't really breached the $4 trillion yet. And that could be another breaking point for the market. $4 trillion, we could see a retracement on that. All those round numbers, there are so many factors to keep in mind. It's hard to know. That's why it's so difficult to time the market, right? BNB at 748, Solana on 181. Solana's been pushing as well, although not as fast, not as hyped as you would have expected it to do, I guess. Cardano at 86 cents. Cardano's pushing for that $1. Litecoin at 116 dollars. There was a bit of reshuffling going on. Toncoin has dropped in position. It's at $3.27 because Toncoin hasn't moved much, while all the other alts like Litecoin, but even Bitcoin Cash has pumped a little bit, and Polkadot is at $4.50 almost. Pi Network slid even further to 45th place, and Bonk is seeing a 22% pump on the 7-day. Let's have a quick look at the charts, because charts is where it's at. So first one up, Ethereum. Ethereum's got this massive God candle, and what I was saying about Ethereum, so we've had 4 consecutive green weeks on Ethereum, massive pump. So Ethereum had a nice pump here, 1, 2, 3. This candle was not big, but 1, 2, 3 weeks. Then we moved sideways. Then we had 4 weeks of green candles on Ethereum. On a daily, it's just been a non-stop upward extravaganza. 1, 2, 3, 4 days, then a red candle, and now 1, 2, 3, 4, 5, 6, 7, 8 days of green. And right now, there are 3 resistance lines that have been formed by 2 Fibonacci retracements, the blue and the green, and the white one is a 25% discount. That is a Fibonacci retracement formed on the entirety of the Ethereum price range, going all the way from 0, from its lowest point to its highest point. And the 25 right here on the fib is a resistance line that has been formed on that price assessment of the price range. And so Ethereum is sitting right now on this candle on the daily as well on the weekly. On the weekly, it's even worse because it's sitting on 3 of them, 3 of these resistance lines. We had a massive push all the way from 2,900 all the way up to 3,700. And so this is why I'm saying we could see a retracement, maybe not even turn into a green week, into a red week. Obviously, it probably wouldn't go all the way down, back down to 2,000, but we could see a retracement on the daily, and see a red candle retrace back down below this level, or this at 3,600 or 3,500. So because of these three resistance lines, we could potentially see Ethereum retrace a little bit because of the massive push. I mean, the volume is pretty good. It's all by volume, obviously, but nothing goes on forever. Bitcoin is moving sideways, which is basically the reason for why altcoins are pumping. Bitcoin is taking a breather. Altcoins are pumping. All is good. ADA is also seen a nice pumpage. ADA is also above the 75% discount. So ADA still has a lot. ADA is completely undervalued right now. We're not even close to the 50% discount on the Fibonacci. There's a lot of free room here on the daily for ADA to move. So start moving, ADA. So there's one Bitcoin researcher who apparently says you can retire with less than one Bitcoin. Planning your retirement according to new analysis, you can retire with less than one Bitcoin to quit the 9 to 5 by 2035. So that's the prediction. By 2035, having less than one Bitcoin could be enough to retire on. So here's a chart. It's a funny chart. I guess this is like meant to show you based on the region, on the on the expenses adjusted for inflation, 7% adjustment for inflation and all that stuff. But in Monaco, you would require somewhere between 1 and 10 Bitcoin in order to retire by the age of 5 or by the age of 75. And in Switzerland and Canada, it just keeps dropping down. So depending where you live, Burundi, you would require like 0.01 or 0.09 or 0.05 or something like that Bitcoin in order to retire, depending on where you live. So but that's an interesting assumption. And the assumption is that Bitcoin is going to pump massively. If Bitcoin pumped to several $1 million per Bitcoin, of course, that would help you sustain your retirement. Of course, the amount of Bitcoin you need to retire depends on the country you live in, with Burundi and Afghanistan among the cheapest destinations. Hodlers can withdraw from 9 substantial less than 0.1 Bitcoin. Of course, they may be dwelling in caves with no electricity, but maybe if you really hate your boss, the option appeals. So it's a funny little chart, but the idea is that Bitcoin is going to go much higher than where it is right now by 2035. Obviously, that's another bull run. So the assumption is that I don't know. There will be another bull run. There will be a retracement. There will be a cool down period, obviously, because markets can't continue on forever in an upward moving trend for 10 years straight. There will be retracement. They may not be 80% like we've seen in the past, because there's a lot of money coming into the markets now, but there will definitely be profit taking, obviously, because that's what markets function on. So how does Smitty come up with these numbers? The first reason is that the US monetary expansion continues to grow at a 7% annual rate. The second is that annual expenses remain on par. For this study, annual expenses are based on each country's average annual income in USD, taken from worlddata.info. The model also assumes that everyone lives to 100 years old, so depending on your genes, you may need more or less sats to see you through to your deathbed. The calculations also do not take into account the specific taxation requirements per jurisdiction, as one follower points out. So yeah, there you go. So but it's a nice idea to have for Bitcoin letting you retire. I talked about Andreas in the past on several occasions, comparing, well, not comparing, but suggesting that he should be the guy you should be listening to, not,
means
Pompliani and all the other guru wannabes.
In any culture, any language, any religion.
Andreas has been talking about Bitcoin since 2013. This is the first time, I think this may be his first Bitcoin presentation. And if you look at the stage, look at this, there's like 4 people, there are bunch of chairs, 4 people, nobody there, and Andreas talking about
geography,
Bitcoin and cryptocurrencies.
economic system. So Bitcoin neutrality is about making Bitcoin a standard that is independent of your desires and expectations. This isn't a libertarian currency any more than it's a communist currency. It's a currency, and it can be applied to any political system, whether it is the political system you like or not. It's a neutral currency. So what does neutrality mean? Neutrality doesn't mean no principles. Neutrality is a principle in itself. And in fact, what I'm here to talk to you about today is that neutrality is the most important principle in Bitcoin, and most of the other great things derive from that. If you want to really understand how neutrality will affect Bitcoin in the future, we need to look at what has happened with the internet and TCP/IP in terms of neutrality.
I wish I had seen this talk in 2013. I didn't become aware of Bitcoin until 2017, unfortunately. Breaking, 74% of all Bitcoin is now held by long-term holders, a 15-year high. Nobody's selling. What happens when demand spikes again? Right, when demand spikes again, prices will go up again. But that's a massive number of Bitcoin being stashed. And warning signs flash as Bitcoin miners unload at record pace. Bitcoin price tag has drawn fresh selling from the very people who dug it up. On July 15th, miners sent a hefty 16,000 Bitcoin to exchanges, the most in a single day since April, raising questions about how long the rally can keep climbing. According to CryptoQuant data, these daily outflows edged past the earlier high, signaling that miners are cashing in on recent gains. That kind of supply surge can weigh on prices, at least for a little while. Obviously, they're cashing out because they have to pay. They've got bills to pay. They got to pay for electricity bills and maintenance and all that stuff, right? Based on reports from CryptoQuant, the jump to 116,000 Bitcoin occurred as miners sensed a chance to lock in profits after Bitcoin's latest spike. Earlier this year, when Bitcoin was pumping to from 74,000 to 100,000, miners offloaded 17,000 Bitcoin in April alone. Now prices pressing past 120, they're back at selling more. Big miners aren't the only ones stepping to the exit. Wallets holding between 100 and 1,000 Bitcoin cut their balances from 64,000 Bitcoin to 68,000 Bitcoin to 65,000 Bitcoin since mid-June, about 3,000 Bitcoin shed in just a few weeks. During the April rally, that some groups sold close to 5,000 Bitcoin before shifting back into buy mode when prices settled into a range. Now they're a key source of extra supply as the latest breakout attracts their attention. So there's some selling pressure, obviously, from miners, obviously, to cover expenses, most likely, but obviously to take some profits as well. And altcoin momentum surges as Bitcoin season nears its end. Bitcoin dominance appears to be waning as a fresh wave of altcoins narratives begins to take hold. According to data shared by Altcoin Vector, the market is transitioning away from Bitcoin-led momentum, with altcoins showing widespread signs of life. Oh, that reminds me, I didn't look at the market cap for altcoins. Is presently at $1.5 trillion. Also dollars, also nice pump, mirroring the move of Ethereum. Obviously up, on and up. We're almost at the all-time high for the altcoins market cap and Ethereum, and obviously that is being led by Ethereum. So Ethereum hasn't Ethereum needs to hit 4,100 in order to call a new all-time high, but I guess we're gonna have to wait for that a little bit longer. The liquid staking derivative narrative has now taken center stage, climbing to the top of the narrative rankings. This shift coincides with BlackRock's recent push for Ethereum staking ETFs, drawing attention to key tokens such as LDO and layer 2 assets. Apparently the Bitcoin season is fading and the impulse season is on the rise. Altcoin Vector's analytics show a strong increase in participation across altcoin markets. The altcoin impulse has hit 48%, which means nearly half of the top 100 coins are now registering a positive trend. This marks a significant broadening of market engagement beyond just a few isolated projects. So it looks like the market is shifting course to altcoins. If you hadn't noticed yet, there you go. You got some stats to prove it. Shocking. IMF report reveals El Salvador hasn't brought more Bitcoin since signing non-accumulation agreement. There was some FUD going on. Apparently, IMF has announced that El Salvador, President Bukele, has not been buying any Bitcoin despite the announcement that they have. And so the question is, who's lying? Is IMF lying or is Bukele lying? That's the world we live in. Deception, false claims, and lies. The International Monetary Fund released a report earlier this week as part of its first review of its loan program, noting that the stock of Bitcoins held by the public sector remains unchanged. According to the report, El Salvador's Chivo Bitcoin wallet does not adjust its Bitcoin reserves to reflect changes in Bitcoin deposits. Chivo doesn't sell its Bitcoin results in minor discrepancies that made it seem like El Salvador's public sector was buying more of the benchmark cryptocurrency. In a attached letter signed by El Salvador's Central Bank President Douglas Pablo Rodriguez Fuentes and Minister of Finance Gerson Rogelio Posada Molina confirmed that the Central American nation has provided the addresses of all its hot and cold wallets to the IMF for review and monitoring. So last year in December, the El Salvadoran government received a $3.3 billion loan package from the IMF on the condition that they would stop accumulating Bitcoin. Nevertheless, Bukele's administration has repeatedly touted new buys of the Bitcoin daily since November 2022, when the millennial president introduced this strategy. And on March 4th, when the conditions of the loan deal were revealed, Bukele proclaimed that El Salvador's Bitcoin shopping spree was not stopping. They presently hold 6,243 Bitcoin, according to data from El Salvador's Bitcoin office, as well as, I think, if we go on Arcom, El Salvadoran government is holding 6,244 Bitcoin to be precise right now. So the article states is 6,243. Arcom says 6,244. So it seems like they are still accumulating some Bitcoin. 21 Shares files for cryptocurrency index FTS with the SEC. It excludes Bitcoin but targets top 10 crypto and enhances US market access to digital assets. 21 Shares has registered 2 new ETFs with the US Security Exchange Commission, specifically targeting digital assets. The 21 Shares FTSE Crypto 10 Index ETF and the 21 Shares FTSE Crypto 10 X BTC Index ETF, man, those are some mouthful of names, aim to provide extensive market exposure, partnering with index provider FTSE Russell and advisor. The launch leverages their expertise in both traditional and digital markets. So more and more announcements from companies getting on. Shanghai court tackles 6.5 billion yuan illegal stablecoin network. Yang and Zhu orchestrated an illegal stablecoin transfer network using USDT for cross-border funds amounting to approximately 6.5 billion yuan over 3 years. Regulatory implications are apparent, with the cracking down reflecting a push to enforce legal financial channel compliance. Leave it up to China to make a mess out of stuff. India's CoinDSC X hacked 44 million stolen, which crypto exchanges are safe. No crypto exchanges are safe. That's why I keep saying pick up a Descent wallet. Save your crypto on a Descent wallet. Don't leave it on exchanges because you never know when exchanges will go bust. If you pick up one right now, you get a $33 discount. With the purchase of 2, you get a $99 discount on these beautiful wallets. So pick them up and store your crypto on them. Also, quick announcement. The Crypto and Millennials book is now out. It's officially uploaded. The manuscript is uploaded. You can download it right now or pre-sale. I guess it's set for September 1st. So that's when the official sale will begin. But you can pre-order it right now. It will be available on September 1st. So get that right now. And thank you for supporting the channel. This book will provide you with a lot of information, a lot of useful information that I was able to gather over the past almost a decade being in cryptocurrencies. I wish I had this book in my hands when I was starting because it is an eye-opener. It provides explanation of what crypto is, why it's there, why the importance of cryptocurrencies, and I go into a lot of details of the different types of cryptocurrencies and what they do. And so if you are still unclear, because I mean the cryptocurrency space is such a big space. So I have provided you with a guide that hopefully will be helpful, helping you to understand cryptocurrencies a little bit better. The SEC anticipates unified decision on Ethereum ETF amendments. SEC may approve Ethereum ETF collateral and staking amendments soon. Unified decision anticipated by Q4 2025, affecting major asset managers. Institutional inflows expected, boosting Ethereum's market position. BlackRock has submitted an amendment for its iShares Ethereum Trust to incorporate collateral functionality in Ethereum ETFs. This filing has registered the SEC's consideration of batch approval method, which follows a similar path as past Bitcoin and Ethereum ETFs. Collaboration measures by key players have promoted anticipation shortlisted decisions for the fourth quarter. The SEC's consistent pattern for ETFs implies likely simultaneous ruling for all applicants. So it seems like once applications for the approval of Ethereum ETFs comes through, all of them will be approved all at once, and so there's going to be a whack of Ethereum ETFs coming out onto the market, which is why Ethereum is pumping now, why people are picking up more in the Ethereum, and why Ethereum is going, the price for Ethereum is probably going to continue pushing in the future as well. Is the crypto market topping out? Key signals to watch out for. Social and on-chain data reveal early warning signs. One of the first red flags is a surge in mentions of alt season. When this term makes up more than 1% of crypto-related discussions, it usually signals that retail euphoria is peaking. He also pointed to a common pattern called social divergence, where prices rise while social interest fades, often a signal that the excitement is dying up. More advanced insights come from cross-platform analysis. While Twitter may show fading interest, a sudden spike in 4chan chatter typically precedes market climaxes. According to Maxim, the combination of both is a high conviction top signal. He also highlighted rising DeFi borrowing activity, particularly the jump in USDC yields on Compound to 11%. Historically, yields nearing 20% have marked periods of speculative excess and market reversals. Once you start hearing conversations about top or about alt season markets, it might be time to turn on your caution sensors. And one last announcement here from Binance: Ethereum ETFs staking approval timeline extended. According to O'Daily, Bloomberg ETF analyst James Seyfat shared on the X platform that several institutions have submitted applications for Ethereum ETF staking options, which will require more time to complete. Final deadline for early applications is set for late October 2025, while BlackRock's Ethereum ETF staking application is expected to be reviewed by April 2026. However, it is anticipated that approval could occur as early as the fourth quarter of 2025. Meanwhile, VanEck 21 shares Canary Capital have urged the U.S. Securities and Exchange Commissions to adopt a first-come, first-served approval process rather than approving applications in bulk alongside BlackRock's later submission. And the reason for that is because we are in the bull market, and despite people saying that there will be no bear markets, that this year is different, the cycle is different, I guess we don't know until we know, right? We won't know whether this cycle is actually different or if it's not, if it's the same, until we actually see the changes, the differences. So from the past, historically, these cycles went out until November, December. Towards the end of this year, we should see a crescendo and a conclusion of the bull market, and then proceeding sell-off timeline into 2026. But I mean, if that were not to happen, then obviously we could safely say that this time it is different, but we don't know until we know, or we won't know until we know. We will know. In the meantime, MicroStrategy continues to pick up some more Bitcoin. MicroStrategy's, I guess, average purchase value of Bitcoin is $71,000. They're presently holding 601,000 Bitcoin, which is a lot of Bitcoin. Quick reminder for you to pick up a Descent wallet. Store your crypto on that. Don't be one of those people who lost their money on an exchange. because you were too cheap to pick up a wallet to store your crypto on at a discount. Also, remember, the book is coming out. If you are not sure about crypto, if you're not sure what crypto is still, if you're still confused about crypto, then pick up a Crypto and Millennials. It's on your phone. You can download it on your phone, obviously, and read it at your comfort. If you have a Kindle, even better. Congratulations on your Kindle. And you can pre-order this book now. It's only $11, the price of a coffee, Starbucks coffee. So get it now, get yourself educated, and be crypto smart for the future, yo. Thank you all for watching, thank you for tuning in, and thank you for your support. Please also remember to smash the likes on this video, subscribe to the channel, come back tomorrow for another update from the Crypto Father channel. Until then, have a fantastic Monday. Peace.